afternoon. This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. And I'm your host, Christine Lee. Taking a look at Bitcoin right now, the CoinDesk Bitcoin price XBX index is trading around in and out of $38,000 right now. Bitcoin is up almost 5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Taking a look at our top stories, Bitcoin trading sideways over the past few days with support around 33,000 and resistance at 40,000. The broader uptrend is weakening as Bitcoin remains below the 100 and 200-day moving averages. This suggests limited upside over the short term. Meanwhile, institutional investors are exiting Bitcoin positions for gold following a 35% drop in May, according to JP Morgan analysts. Meanwhile, a Goldman Sachs commodities researcher saying BTC is more like a digital copper. Both are, quote, pro-risk, risk on assets, and substitutes for risk on inflation hedges, not risk off inflation hedges. And finally, 4 investment firms, WisdomTree, Van Eck, 21 Shares, and the ETC Group, have all received approval for a total of 9 Bitcoin and Ethereum exchange-traded products on the Euronext stock exchanges in Paris and Amsterdam. While many of the ETPs are already trading on the Deutsche Börse in Germany, the investment firms are expanding their range of products to France and Holland due to investor demand. And joining us now to discuss is Jason Guthrie, European head of digital assets at WisdomTree in London. Welcome to the show, Jason.
Hi, thanks for having me.
Good to have you. All right, so the WisdomTree Bitcoin and WisdomTree Ethereum ETPs have been trading in Germany since April. Perhaps if we could just start there first, how have they been performing and what kind of volumes are you seeing?
The products have been performing really well. Volumes are kind of picking up steadily. I think with all Bitcoin products, it's very sentiment driven and driven by what we've seen in the market. So the recent pullback and sideways trending that we've seen in Bitcoin and Ethereum, I think has dulled them a little. But, as we start to see more aggressive price action, the expectation is that that's going to pick up.
Mm-hmm. And so why are you moving into the French and Dutch markets? Do you have a sense of how volumes have been in these initial days?
I think with all new ETP launches, things start slow. It takes time for clients to be aware that there's a new route in order to access a given exposure. This isn't a crypto specific, but generally with exchange traded products. I think coming to Paris and Amsterdam widens out the spectrum of clients that can get access to these products. Europe is very fragmented still. A lot of local markets, local brokers, local advisors trade primarily through their local exchange. So these listings just expand that base and give access to a wider variety of clients.
And do you have a sense of whether or not the proportion of investors are more retail versus institutional?
It's a mix. There's definitely heavy demand through the platform sector, through the advisor channels for these products. But what is steadily growing is the institutional demand. And I think that this is, it never comes in one big lump. There's never a, cliff edge moment when everybody shows up at the same time. But what's great about the institutional base is that they have a much longer time horizon. They're less responsive to price. So we've had a lot of people looking at crypto investment from institutional investors here in Europe. And the current price levels, I think, look very attractive for people entering. So we are seeing people come to this, and I think we are starting to skew institutional in the current environment.
Interesting. Though, as I mentioned before, the crypto markets Bitcoin has crashed about 35% last month. Has that had a chilling effect on new institutional investors?
I think it's seen more as an entry opportunity. We've heard just as many people talking about topping up positions or making their entry into the market as those that are thinking about pulling back. As I say, institutional investors far less responsive to short-term price moves than you see in retail platform segments. And I think that this does represent a really good entry opportunity for those that have been on the sideline.
I mentioned 3 other investment firms that are also getting into ETPs in Europe. Is there any concern that the market is saturated out there?
Exchange-traded funds, exchange-traded products is a very responsive space. So, yeah, there are several people out there doing crypto exchange-traded products. I think the space is crying out for some product innovation and sort of new entries or new exposures to come into that space, and hopefully we'll see some of that soon.
Mm-hmm. You know, WisdomTree's application to list a Bitcoin exchange fund in the United States is being reviewed by the Securities and Exchange Commission. I wonder, how is that going? Are you familiar with how that process is going in terms of what the United States is doing and what the talks between regulators? Are things cooling down? My sense is that regulators have been not so interested in approving an ETF anytime soon.
The news you hear about the regulators, their position in the US, Bitcoin ETFs, it does sort of come in waves. I don't think there was any expectation that they were going to move very quick. A lot of people were pinning a lot of hopes on Gensler sort of coming into that seat at the SEC, but no one ever expected that it was going to move quick. I think the most optimistic timeframes I heard anybody putting on this was end of the year 2021, but I think given that SEC has got a lot of priorities, there's been a lot of volatility in Bitcoin, that's probably, it's probably early 2022 at this point. I think there is a desire to allow the products to come to markets. My field generally with regulators globally, not just the SEC, is that there is a desire to bring crypto-related activities, crypto service providers, crypto products under that regulatory regime. And exchange-traded products are a very efficient way for investors to take exposure through sort of regulated venues in regulated products. So this ties up, approval of this would tie up with their, I think, general goals. So I think it's a matter of when, not if, but it is going to take time. It's always a slow process.
Well, there was a lot of optimism because Canada had been approving a slew of ETF products with Bitcoin as well as Ethereum. There are a whole bunch of ETPs available in Europe. Some policymakers in the United States have been calling for some movement in this area. Why do you think the United States is so slow?
Crypto regulation is, I think, fragmented to say the least. Different regulators are looking at different things at different times. Some regulators more forward-looking when it comes to investment products. Others are more focused on other elements of the space, say custodians or brokers or exchanges. In the US, you see sort of good movement on the custodial side. NYDFS seems to be the regulator of choice for regulated custodians, which is great. It would be, encouraging to see them move quicker with the investment product side of things. But as I say, every regulator takes their time on different areas.
And Jason, so far, WisdomTree has been focused on Bitcoin and Ethereum. I wonder, is WisdomTree interested in DeFi or other altcoins?
Absolutely. Look, the whole blockchain space, crypto assets generally, incredibly interesting. There's strong client demand, I believe, for sort of everything you've just listed. DeFi alternatives, Cardano is a very popular topic. So I think from a product standpoint, further development is definitely on the cards. If I thought it was just Bitcoin and Ethereum, I don't think we'd be here. So the universe is much bigger, and we're definitely interested in further developing that range.
All right, Jason, thank you so much for joining me this afternoon, and congratulations on the new listings. That was WisdomTree European Head of Digital Assets, Jason Guthrie. Coming up, multi-sig addresses are accumulating more and more Bitcoin. Analysis with CoinDesk's Director of Data and Indexes next.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Welcome back. The amount of Bitcoin stored in multi-signature addresses has increased by about 60% since about 2018, but has flattened out since June of 2019, you see down there. But according to data, and that's according to data from BitMEX and Coinmetrics, multi-signature wallets, or multi-sig for short, are cryptocurrency wallets that require 2 or more private keys to sign and send a transaction. The storage method requires multiple cryptographic signatures, which is a private key's unique fingerprint to access the wallet. As more companies and institutions enter the crypto space and acquire Bitcoin, that could account for a rise we see in multi-sig addresses businesses accumulating Bitcoin. CoinDesk's George Kaludis suggesting the upcoming Taproot upgrade to the Bitcoin network will improve multi-signature wallet functionality and should encourage more adoption growth. And joining us now to discuss is CoinDesk Director of Data and Indexes, Galen Moore in Boston. Welcome, Galen.
Hi, Christine.
Good to see you. All right, so as you saw in the chart, do you think we see a rise in multi-sig addresses getting their hands onto Bitcoin since 2018, but flatten out in 2019?
Hard to say exactly. As always, there's a caveat with crypto data. You can always take an interesting look at what's happening on the network, but sometimes you don't know exactly how to interpret it. In this case, we see the number of Bitcoin in multi-sig addresses increasing dramatically in 2018 and then leveling off mid-2019. One possible interpretation, the rise of crypto custodians. Coinbase Custody launched in 2018. Anchorage was not far behind in early 2019. But I think the broader takeaway from this, Christine, is more relevant to the upcoming Taproot upgrade, which has a multi-sig component that will make will basically make this chart will not be possible once Taproot is complete. Multi-sig, you will not be able to tell the difference between a multi-sig address and a standard address, and multi-sigs will be easier to use. So I think if you look at this chart, there's some sort of maybe optimism that you might see a increased use of multi-sigs on Bitcoin. But at the same time, you might say, well, demand has been pretty anemic for this type of address. So, is this really going to be a part of Taproot that will really provide benefits for the network is a fair question to ask.
What do you mean this chart won't exist in that? Are you just saying everyone will start using multi-sig, or because of Taproot, you won't be able to tell the difference anymore? Sure.
Yeah, it's really being able to tell the difference, Christine. I mean, Bitcoin, is cash-like in many ways, but does not have the privacy features of cash. A lot of features of transactions are visible to anybody on the network. So if you're using a multi-sig right now, we're able to identify that, that address is using that's a multi-sig address that is being used in that transaction. With Taproot, all transactions will look the same, whether they're using multiple signatures or a single signature. So that's a privacy feature in a way for those who may want to use a multi-signature setup where you need at least 2-3 people or entities to sign onto a transaction. But they don't want that they don't want to broadcast to the network that they have that need, right? So you might see, for example, institutional players valuing that kind of privacy. Or other actors on the network might want that kind of privacy as well.
Do you think that there will be more people using multi-sig? Will that become more popularized? And I say that because two-factor authentication is inconvenient enough. So do you see this migration into this really much more difficult way of custodying your coin?
Sure. I mean, do you really want to go and have to get somebody else to sign on when you want to trade or something? I think for the vast majority of Bitcoin users, that's probably a bridge too far. But there certainly is a segment that would value that, right? If I was, custodying other people's funds, for example, I might want to have some governance in place that would require multiple signatures before the funds could be moved. That would be a good practice. So I do think as you see, institutional adoption, technology like this is likely to become more in demand. Another aspect, by the way, is that a multi-sig is essentially a kind of smart contract. So by adding and improving the functionality in multi-sigs, Bitcoin is taking a step toward richer functionality. It's certainly not, becoming Ethereum in any way, but there is a kind of a lean in that direction, at least, that might, create some new innovative uses of the Bitcoin network. I
can't let you mention institutionals using multi-sig without mentioning Quadriga CX, the most infamous case, whose founder, Canadian Gerald Cotton, died mysteriously in India, and he was the sole possessor of the cryptographic keys to the exchange's wallet. Now creditors have been waiting 4 years to get over $100 million back. So do you think there are a lot of institutions or large Bitcoin holders that don't use multi-sig?
I mean, my guess would be that most sophisticated participants, at that level, especially if there's a fiduciary responsibility, are going to be using a custody provider, and that those custody providers will have systems like multi-sigs in place. I mean, for example, you can have a sort of a 2 out of 3 signatures requirement, or 3 out of 6 or something. In which case, 3 different entities have the key, and at least 2 of them have to be present in order for the transaction to take place. That kind of scenario would have prevented, say, one of the parties gets hit by a bus or goes to India and disappears, and you can't recover the funds. So this is the kind of, I think, operational security that's part of the custody business, and that I think a growing number of well-known custodians are building up.
Well, it's a frightening prospect that an institution or exchange would be holding hundreds of millions of dollars with one guy with the private keys.
I think fortunately we're kind of moving past that stage of crypto infrastructure maturity.
The industry is growing. Excellent. Galen, thank you so much for joining us this afternoon.
Thanks, Christine. Always a pleasure.
All right, that was CoinDesk Director of Data and Indexes, Galen Moore, and that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the global crypto news headlines. You're watching CoinDesk TV.